So in this video, you will see how for the Nasdaq 100, we go from the blue RSI to the green smooth RSI, and what ChatGPT thinks about using that green RSI to identify bull market regimes and bear market regimes and any transition in between them. So after logging into the quantitative investing dashboard, we click on the indices assets, and then we will move into the market signals, trading indicators, and charting tools module. Within that module, we will select the filtering and classical indicators toolbox, and within that, we will now focus on the RSI with Wavelets Filter page. Here we will look for the Nasdaq 100 index, and we'll start from 1997 January until 2025 June. Now let's take a little bit of time to explain a little bit what we see on this page. So we have two graphs. The top one shows the daily close price, in this case of the Nasdaq 100, and we have the original signal in blue and a filtered version in green. And the bottom graph shows the relative strength index, or RSI. Again, in blue, it's the original RSI of the unfiltered signal, and in green, it's the RSI of the filtered signal. Quick disclaimers: we do not give investment or financial advice. We are only sharing our personal opinions. Now, a bit more information regarding the green line, which is the filtered signal that you see here. This one has been obtained using a so-called wavelet-based denoising filter. And specifically, we use here the symmetric wavelet family, which tends to have good time frequency localization properties. And this is much better suited to denoise so-called non-stationary price data. So non-stationary time series, they refer to data where their statistical properties change over time. So like their metrics like mean, variance, and autocovariance are not constant over time. And what else can we say about this wavelet filter? Well, it uses a wavelet decomposition level, which you can adjust here through this menu bar. And the purpose of changing this value here is that it allows you to smoothen out the original price data and basically remove high frequency content. So to show you this, let's, for instance, take an example. We will change the time here. We'll start by 2022 because it's going to be easier to see. And if we change now the wavelet level from 1 to 4, you already see the green line is a much smoother version of the unfiltered blue line, and you already see the impact that it has on the RSI. And now if we even increase further the decomposition level to 8, you see an even more smoothened line, and here again RSI, which also impacts the RSI with higher values and much lower values than the blue line. Now, in previous videos, we have shown how to develop various algorithmic trading strategies using technical analysis indicators in combination with a low-pass frequency domain filter called the Butterworth filter. And that filter is a so-called causal filter, which allowed us to use it also in real-time settings. In this case, when we use the Wavelets filter, it's a non-causal filter, which means that when the green line is computed, the green line is computed by using past data and forward-looking data and future data. So at this point, the point that is, for instance, here, it's being computed using past data before that point, but also data beyond in the future of that point. So it means that this filter is not well suited to be used for real-time trading strategies. However, it can be used to allow us to, let's say, classify market regimes and find also when we detect changes in market conditions. So let's take a step back and explain a little bit what we are trying to do. And so, as usual, we are starting with the quantitative investing dashboard to generate trading ideas. And so basically, here I'm extracting an investment edge directly from these visual insights. And the whole point is here to filter out the noise and focus on the long-term signals and that's actually what matters. So that is where the alpha comes from. So not from frequent trades, but from spotting the big moves early on and staying with them. So it's really all about long-term alpha here. So here is the architectural design of our market regime classification. And as you can see from this flow diagram, we start with the asset price, and eventually what we want to derive is a market regime indicator. To this end, we will first use our quantitative investing dashboard and specifically the Wavelets denoising filter. So we will apply this filter to remove any high frequency noise, and really this will allow us to focus more on long-term market trends. And on this filter, you as a user, you can also adjust the decomposition level. Once we have this filtered signal, then we will apply to it the standard RSI. Now, the output of the RSI will be a figure, an image. We will use that also in combination with the asset price time series data as a figure. We will upload both of those figures to ChatGPT, which is an AI, artificial intelligence large language model. And with that, we will show you some specific prompts that we will input to ChatGPT. We could also add additional signals, like, for instance, the VIX index, volatility index. And the answers of ChatGPT will help us derive a market regime indicator. Quick interruption. If you like the content, don't forget to subscribe and share the video with your network. Now let's go back to our quantitative investing dashboard, and we are again on the RSI Wavelets Filter page. We show the Nasdaq 100 here, starting from 1997 until 2025 June, and we used a wavelet decomposition level of 8. The top graph is asset price, the bottom is RSI, relative strength index. So now let's just keep the signals that we need. And as you can see here, if you click on the legend, you can remove the signals that we do not need. So on the top graph, we will keep the raw data, so the unfiltered asset price in blue. And on the bottom graph, we will keep the RSI of the filtered signal. So we will keep the green one, and then we will click on the blue to remove it. So looking at the bottom graph, the RSI, we see at least two main observations. The first one is that the RSI saturates to levels of between 0 and 100. And so it's a way smoother RSI, and obviously we can already make the link between saturations at 0 as being correlated with bear market conditions and saturation at 100 being correlated with bull market conditions. So that's the first observation. The second observation is that we seem to see a change in market, let's say the market nature post 2022. As you can see here, after 2022, when we look at the RSI, it looks way more nervous, volatile compared to before 2022. So there seems to be also a structural change in the market dynamics after the year, or starting from the year 2022. Okay, now let's download these two figures. And to do that, we will click on the leftmost icon. So for the top figure, we click here, and then it downloads it automatically to your download folder. So here is our downloads folder, and now we see the file. If we double click on it, we see the Nasdaq 100 price, the unfiltered one in blue, between 1997 and 2025. So let's rename now this file. We'll call it Nasdaq 100 figure 1. Similarly, we will download the RSI figure. So again, the leftmost icon, click on it, and then it downloads it to your download folder. Here we are back to our downloads folder, and we see this new file, and let's double click on it. We see again our RSI. So let's rename this file as well. We will call it Nasdaq 100 figure 2. Next, we open the ChatGPT interface window, and we are using the free version of ChatGPT. And first, we will upload our two figures. We'll go to our downloads folder. So we have figure 1 and figure 2. We will upload them here. And we will also start to copy and enter our prompt. So this is the first part of the prompt where we say, I am working with the daily closing price of the Nasdaq 100 index from January 1997 until June 2025, shown in the figure titled Nasdaq 100 figure 1. I have filtered this time series using a non-causal wavelet filter with Symlet 8 to denoise long-term trends. Then I computed the standard RSI of the filtered signal, shown in the figure titled Nasdaq 100 figure 2. This RSI behaves more like a smooth regime indicator, often saturating near 0 or 100, and displaying far fewer oscillations than a traditional RSI applied to raw prices. Perhaps here we can change this a little bit, and we will say this RSI, let's not be too strong on that, seems to behave more like a smooth regime indicator. Yeah, let's keep it that way. Then we will also now add the second part of the prompt, which is this one. Based on this transformation, now here are the questions. First question, what insights does this smooth RSI provide about long-term market regimes? Second question, can it serve as a reliable regime classifier? Exempli gratia, so for example, bull versus bear. Third question, are there any limitations or artifacts introduced by wavelet filtering? For instance, look-ahead bias, because we know the wavelets filter is a non-causal filter, or phase distortion. Question 4, how has market behavior evolved over time? Especially, we have seen from the graph, there seems to be a transition when we compare before the period before January 2022 to post-January 2022. So, and then finally, the last question is any additional observations or relevant interpretations. So we'll click now here, and we'll see what ChatGPT is going to tell us. So it's coming with the answers. Great. Thanks for the context and figures. And it's starting to answer our 5 questions. So we will go through them one by one. It's really thorough. So this is really great. And yeah, let's have a look. It gives us also a summary. So we will go through this one by one now. Now let's review the feedback provided by ChatGPT. So it says you are using a non-causal wavelet-filtered RSI derived from long-term Nasdaq 100 closing prices. Indeed, that's correct. And this produces a much smoother regime-like signal, indeed, compared to traditional RSI. This is also what we have observed. Now, the specific answers for each of the 5 questions. So question number 1 was, what insights does this smooth RSI provide about long-term market regimes? And then ChatGPT answers. The smoothed RSI in figure 2 exhibits binary-like behavior, often hugging the extremes near 0 or 100 for prolonged periods. This provides insights such as bull regimes, so periods when the RSI is saturated near 100, and then it gives the time intervals between 2003 and 2007, 2010, 2021, and these reflect extended upwards price trends, indeed. Then we have bear regimes, periods where the RSI drops to zero. So in the time periods, for instance, between 2000 and 2002, that was the dot-com bear market, between 2008 2009, the financial crisis, and then the 2022-23, the post-pandemic period. And these all indicate sustained downward or highly volatile markets indeed. And then it identifies the transition phases, where the rate transitions from one extreme to another are useful markers for trend reversals or cycle phase shifts indeed. So it concludes for this first question by saying, unlike traditional RSI, which oscillates frequently, this version seems to compress market noise and highlight macro conditions. So that was indeed the intended purpose, that we wanted to remove high frequency noise and really try to generate long-term alpha. And so this seems to be working. So this seems to be the case. So it has been confirmed by ChatGPT, which is already a very interesting and promising result. And then we will move now to question 2. Quick interruption. If you like the content, don't forget to subscribe and share the video with your network. So question 2 states, can it serve as a reliable regime classifier? So bull versus bear. And the answer by ChatGPT is yes, but conditionally. So first, ChatGPT mentions and identifies the strengths. So we have two of them. The first one being high signal to noise ratio, where it says it clearly separates bullish from bearish phases. That's what we see by the saturation of the RSI. And also the second characteristics, which is also an important one, which is about regime consistency. So once the signal enters a regime, it tends to stay there, reflecting market persistence. And we have primarily seen this actually prior to 2022. Now, ChatGPT also lists some caveats. The first one being non-causal filtering introduces look-ahead bias, which limits real-time use. It's great for retrospective regime identification, but not for forward-looking prediction unless adjusted. Which is true, because we have been using wavelets here filtering. And if we were to want to address this point, then there are a few options, but one of them could be, for instance, to revert to the Butterworth filter, the causal filter, which is actually uses low-pass filtering, so we could potentially, have a look at that. And then the second caveat is a lag at regime edges, indeed, maybe underestimating due to phases compensation in wavelets. So what it concludes here by saying the use case, it's suitable for backtesting, post-hoc regime labeling, or informing long horizon strategies. For instance, monthly rebalancing, but not for short-term tactical decisions without adapting for causality. And we fully agree with that. And I think the intended purpose was always long-term investment strategies. So from this perspective, I think that the causality or non-causality impact might be somewhat limited, but it's always good to keep in mind indeed. So question 3, which states, are there limitations or artifacts introduced by wavelet filtering? And here ChatGPT provides this answer, where it says yes, primarily from non-causal filtering and wavelet properties, indeed. So it lists the following items. So the first one is look-ahead bias, which we were already fully aware of, because it says non-causal filter uses future data to denoise the signal. This makes the RSI look cleaner, but not realizable in real time. Yeah, we fully agree with that. The second bullet is about phase distortion. It does say that it is here minimal for the Symlet 8, which is the value that we have selected, due to near linear phase response, but not perfectly zero. So you may see slight lag or advance at sharp transitions. I think the impact of this is not really substantial. The next bullet is about over smoothing, and it says while good for regime analysis, this can ignore shorter trend cycles that may still matter. So mini bear markets inside secular bulls. This is true also, and I'll show you an example of that. So because this, what we really have been aiming for is really long-term alpha. And so this does indeed ignore short-term trend cycles. So here is a illustration of the latest point. And so we see, for instance, if we consider the period between September 2000 and November 2002, we are in a bear market regime because the RSI is at zero. And yet we do see here a small cycle around, let's say, this October, November 2001. We do see a slight, actually, bull market condition. And this has indeed been filtered out by our long-term RSI indicator. Coming back to the ChatGPT answers for question 3, the last item that it does mention is about boundary effects. So where it says that these might be noticeable at the start and end of the signal due to filter padding. This can cause distortions or unreliable readings around 1997-98 or 2024-25. So this indeed might be relevant, especially for 24-25, if we want to use this indicator to project into the future. Now, question 4, we asked, how has market behavior evolved over time? So comparing pre-January 2022 versus post-January 2022. And the answer by ChatGPT is your post-2022 filtered RSI shows a clear break in regime behavior. So pre-2022, we had long, stable bull regimes. Example, for instance, between 2010 and 2021, with minimal RSI fluctuations. And what we see is after 2022, the RSI frequently oscillates, never stabilizing at 100 for long. This signals increased macro uncertainty, higher volatility, and lack of sustained upward momentum. And then it says, it's quite informative. This aligns with post-COVID tightening cycle, geopolitical instability, and market repricing due to inflation, indeed, interest rates, changes, and tech valuation resets. So the interpretation it provides, it says, we are likely in a choppy or transitional regime where neither bull nor bear dominance is sustained, consistent with the signal's jaggedness since 2022. So this is indeed very, very valuable information provided by ChatGPT. Now, our last question, where we said, are there any additional observations or interpretations? And then it gives a few bullet points. The first one is RSI as a regime filter, where it says you have inadvertently constructed a binary classifier via RSI saturation, with thresholds like RSI above 80 for bull or RSI below 20 for bear, can help label periods programmatically. So it's nice to see that. Where we disagree is that this is not done inadvertently. Actually, this is what we were exactly looking for, and this is why we have used the pre-filtering. So we're happy to see that this, by doing so, we have really increased the signal-to-noise ratio, and we are able now to provide a binary classifier. And the second bullet is this one where it says price RSI decoupling. And here it goes into an explanation where it says your figure 1 shows strong price gains even during some RSI zero phases. So it says, for instance, in late 2023. So this is the only point where we actually fully disagree. I'm not sure how it came to this conclusion, and I will show you now in the graph where it says, okay, RSI is at zero in late 2023. So let's remember that, and we will see that this is actually not true. So we are back to our quantitative investing dashboard with the bottom graph being the RSI, and it said RSI at zero in late 2023. And so this is late 2023. The other one where it drops is in 2024, so it can only be this one. So first of all, it's not at zero, it's at 9-ish. So it's in October 2023. But actually, October 2023 corresponds to this downward move here, as you see here. This is October 2023, and then into up until late October. So if we zoom in on this, this is October 2023. So we were in a small bear market starting in July 2023 up until late October 2023. So this lower RSI value early in October 2023 does correspond with this slight small, let's say, bear market condition. So we do not agree with the second bullet of ChatGPT on that one. So we'll go back to ChatGPT now. Back to ChatGPT, where we were actually analyzing the second bullet, the so-called price RSI decoupling. And here it mentioned, yeah, your figure 1 shows strong price gains even during some RSI zero phases. So late 2023. And now when we just checked using our dashboard, and we saw that first of all, in late 2023, the RSI was not at zero, but it was at 9.39. And second, actually in October 2023, we saw that we were in a bear market condition that started in July up until late October 2023. So we did not see price gains. So basically, this is the only point with which we disagree. And I think that this is one of the so-called hallucination examples of ChatGPT. But other than that, I think all the feedback was really great. So it goes on and says like we could also use some other technical analysis indicators indeed, and for real-time use, we have to consider a causal filter, which we fully agree. So in summary, let's review now the summary points by ChatGPT. So it lists aspects and observations. So in terms of aspects, so the insights, so it says it provides long-term regime transitions are clearly highlighted by RSI saturation. Indeed. So classifier use, this is a reliable metric for regime labeling, not for real-time unless adapted. We fully agree with that. The limitations, they are known. They're related to non-causal filtering effects. Also, what this metric, our indicator helped us actually detect or identify is a change in market conditions after 2022, because we saw, as also here confirmed by ChatGPT, a more volatile, fragmented, and indecisive market. And this actually comparing it to prior to 2022, which contrasts with earlier bull bear phases, which were much more clear and sustained. And so now finally, what it also says in terms of use cases, this metric that we have presented here in this video can be ideal for backtesting or strategic allocation. So strategic asset allocation is really also where we would like to move towards, because it's more about long-term investment strategies, long-term alpha. It also mentions cycle analysis, but it's much less suited for raw signal trading. Indeed, it's not suited for short-term trading because, again, we are using a non-causal filter. So all in all, yeah, very interesting feedback provided by ChatGPT. So we are back to our quantitative investing dashboard, and there's something else I would like to share with you and let you know about. First is that on the top graph, you can superimpose SMA lines. So the SMA 50 here in magenta, the SMA 200 in white. And what you also can do is, besides downloading these pictures as we just did and uploading them to ChatGPT, what we also offer is actually to download the time series as a CSV file. So if you click this button here, download, it will, and then you click allow, it will download those figures, figure 1 and 2, into your download folder. So after clicking on the downloads button, you will find both CSV files for figure 1 and figure 2 for the page called RSI with Wavelets Filter in your downloads folder. So here as an example, we opened a Google Sheets document, and now we will open one of those files. So we go to upload, we'll show you. Let's take the second one, the second figure where we have the RSI data. And place current sheet, we'll import the data. And now here we have 3 columns. We have the date, Y feature, which is the classical RSI, and Y filtered feature, which is the RSI of the filtered asset price. And now you can use this data within your own machine learning module or AI module or any other investment strategy. Now, in the next video, we will actually compare the output of ChatGPT with other LLM models like Claude or Gemini from Google and other ones. So we will keep everything the same data, the same figures, the same logic, the same prompts. We will just change the LLM model, and we'll see how this is going to compare to ChatGPT. Thank you for watching, and until next time.